Hey everyone, me Kevin here. Well, today was a very interesting and tough market, especially when apparently computers and algorithms helped to destroy it today. Take a look at this. This is from the Bloomberg terminal. They say largest sell program in 3 weeks draws large futures sales. And then the tumble, because in case you have, if you're like me and it's like, oh my gosh, can we just speak English please, because this is ridiculous. They say, the tumble in stocks this afternoon came as algorithms let loose on the biggest sell strategy since March 25th. And then some fancy program just hit before 2 p.m. Eastern time in New York. At the same time, a bunch of futures were unloaded and the market plummeted. And so they give this little chart here where we can kind of see the lines here show negative, which would be a sell right here. This would be sell pressure, right? And this is the largest sell pressure that we've had since over here, March 25th. Obviously, these were periods of time we had a lot of volatility. These were periods of time we had a lot of volatility and pain as well around that February 8th period, around that February 19th period. So you can definitely see when we get big spikes to the negative side here, we definitely tend to get some sell pressure. Now that came at the same time as Coinbase was already on a downtrend, and folks, that set the market off today in a bad way. I mean, take a look at this. What I'm going to do is I'm going to pull up the chart for Coinbase, and let's go back on a minute-by-minute basis and just look at what that means, because a 2 p.m. Eastern sell-off puts us right around here, right there, which is right around when Coinbase was trying to find itself, right? Now it was sort of balancing around this 390, bobbing around a little bit. It did start selling off a little bit towards this contract. The contract starts selling, maybe not necessarily directly affecting Coinbase at this time. In fact, if we jump on over to the SPY, this is where we're going to see a little bit more of a pronounced sell-off. If we go back to 2 p.m., there we go. Here's our 2 p.m. sell-off, literally right at 2 p.m. here. We see that sell-off in the S&P 500, which really kind of starts this downward spiral. Of course, you get sort of the buy the dippers, brings it up, but it really started this downward spiral for the S&P, and it dragged really all of the stocks in it down. And remember, when you're selling the S&P 500, you're selling all the stocks within it, so it's really the stocks themselves that are going down, and then the index goes down, right? Well, that falling in the rest of the market, which really started around that 2 p.m. time, then started manifesting in Coinbase, and then a lot of folks believe that Coinbase's continued sell-off throughout the day ended up leading to other stocks to also sell off more. So in other words, it's kind of like Coinbase was kind of already on soft footing, like trading volumes were plummeting, and Coinbase was like, we're having trouble finding support. Then all of a sudden we get this big sell contract thanks to the algorithms coming in, selling off a bunch of stocks in the S&P 500. Those stocks sink, which just accelerates the sinking of Coinbase, but then the sinking of Coinbase accelerates the sell-off of everything else, which led to articles or headlines like this. Sell-off in Coinbase spreads to tech and across main averages. A sharp sell-off of the highs in Coinbase following its initial open could have triggered a sell-off in the NASDAQ 100. The drop in tech shares spread across main averages, with the S&P 500 following suit. So really, nobody really knows what came first here, the chicken or the egg, soft footing at Coinbase, and then this algo trading, or the algo trading just reiterating the softness at Coinbase, and it doesn't really matter. All that matters is, folks, bond yields stayed down. We didn't have bad news from the Fed. We barely had an update from the Fed in their interview this morning. We barely had an update in the Beige Book. The Beige Book with the summary of economic conditions is not even worth talking about because there was barely a hint of any kind of change at all. The only thing that was maybe remotely mentioned was that, yeah, right now prices are trending up a little bit, but we don't expect that inflation, yes, prices going up is a form of inflation, to last. I mean, that's the same thing that the Fed's been saying. It can't be that, so it's not bond yields. It's not the Fed. It wasn't inflation data. No real data came out today that we were really worried about. I mean, we have some data coming out tomorrow. In fact, I'll go ahead and pull up some of the catalysts that we have coming up because we do have some catalysts coming up. So we'll take a look at these. We've got the Beige Book was today. That's it. Tomorrow, we get March retail sales and March industrial production. Friday, we get housing starts. along with, and we had bank earnings today, which actually were mostly positive. So when we look around, it's like, wait a minute, like, why did the market sell off today? No real reason. And so this really led me to think, okay, well, I'm not seeing a reason for the market to sell off. I'm going to buy this dip on Coinbase and lower my cost basis. And I'm glad I did, because in the after hours right now, we're actually already starting to see sort of that renaissance of the Bitcoin and crypto stocks that so heavily sold off today. Coinbase closed at 328, which is obviously substantially down from the 381. And now in the after hours, it's up to 341. It's up 4% in the after hours. My cost basis on it is right around, I want to say 553. So I'm definitely upside down by the tune of about $12 per share. Not too worried, $12 per share. I've got about 850 something stocks or shares. And if this ends up falling to like 315, 300, I'll definitely be executing some of the limit orders that I have, and I'll buy some more. But look, we're having the same kind of rebound happening here at a Marathon, at Riot, and so far, indications are that this maddening kind of sell-off that happened today may have just been exactly that, an emotional wreck of people selling off. Now, there's this conversation circulating on the internet about people going, that's it, you can't make money in stocks. And quite frankly, I don't blame anybody for thinking that who just started investing in stocks in 2021. Like, if you started in January and it was like your New Year's resolution, I'm going to get into stocks, you're getting a really good introduction to stocks right now, because you's upside down. In fact, pretty much, I mean, most stocks that have been bought since January, with the exception of some recovery stocks, depends which ones, a lot of stocks since January have sold off. Certainly tech, certainly electric vehicles. So stocks have just rotated out of favor. This, to me, is a perfect opportunity not to say, that's it, you can't make money in stocks, that's it, I quit, I'm done with stocks. This is the best time to consider buying stocks, especially ones that have sold off. So I'm not talking about going in buying Pinterest right now. I'm not talking about buying Etsy right now, and I'm not talking about buying Square right now. I'm interested in buying stocks that have pain. Tesla, even over 700, honestly, I think right now we got some better opportunities. Anything SPAC related is destroyed right now. Talk about, like, you want bargain basement prices, anything SPAC related, now's your time to look at a list of SPACs that have sold off. I mean, you could look at CCIV, certainly the like ChargePoint, or some of the other charging companies. Matterport is another one that has sold off. You've got some SPACs that are really high quality stocks that are just in the toilet. And it is what it is. It's just part of a cyclical rotation. This kind of stuff happens when you're in the stock market. I like to always think about it as kind of like there's Mr. Market, and he's kind of like Luigi in Luigi's Mansion. He's got this flashlight, kind of looking around, and it's kind of like, you know, sometimes it's over here on Tesla, sometimes it widens the scope and it looks at all EVs a little bit, but mostly right now the flashlight's not really looking at EVs. In fact, recovery stocks had the flashlight on them for a period of time, but even they are kind of selling off right now. You know, we had a positive day in genomics today. Maybe that's because Kathy Wood helped Mr. Market go, oh, what's over here? But really, I honestly, I think the aggregate market is literally like, oh, I'm stupid. I'll just shine a light over here, and I'll shine a light over here. It's literally, there's no rhyme or reason sometimes why the flashlight is shining in a certain direction versus another one. It literally just creates opportunities to buy. So anybody who's sad because their EVs are down or their specs are down, you gotta think about this like a long-term investor. That, hey, it just means the flashlight isn't over here. Don't worry. Let the other things get their light. Let them get their dose of light. And then when it's time for you to get your dose of light again, things will be fine again. Now, if you're day trading or you're swing trading, sure, maybe you're sad. But look, I mean, you day trade something like Coinbase. I mean, if you were lucky and you traded it right at the beginning of the day, perfect, great. For me, Coinbase isn't a day trade. It's a buy and hold. It's part of my M1 Finance pie now. In fact, I added it on M1 Finance. And our M1 Finance order, a lot of the course members who joined me this morning when we had our private live stream strategizing on exactly what to do and what the heck was happening in the market, we're like, hey, let's add Coinbase to part of our M1 Finance. And when we executed those orders, they went through at 312. Like, it was great. They went through so low. I think some people got executed at like 310 and some went in at 315. But we had sort of a big basket go through of Coinbase right there at noon, which was awesome. You know, that was quite literally the bottom of the market. Now, certainly that wasn't all of the shares I bought. Most of the shares I bought are higher. That's why my cost base is somewhere around 350. But it doesn't matter to me because it's a long run bet. And so I personally believe that if Coinbase goes down more, it's an opportunity for me. The same is true of some of these other stocks. Now, there's a balance. You don't want your stocks to go down so low that it's kind of like, great. Now here we are looking margin in the face again. Like, here's that margin call, right? So that's that personal balance you have to work out. But we've got to really remove ourselves from that daily emotion of, oh man, your stock is down. Like, personally, I hate it when people are like, send me text and like, oh, good job, Tesla's up today, your portfolio must be up X. Like, they do the math on my portfolio. It's like, stop. I'm purposely not trying to look at my portfolio on the green day, because if yesterday, which I didn't do, I did not look at my portfolio yesterday when Tesla was up like 7 or 8%, because I would have looked at my portfolio and I would have gone, oh, sweet, we're up like $1 million or whatever. And then today I'd be like, oh, man, I'm down like 400. Like, it's so bad. It's so bad for your psychology to do that. It's not worth it. Look at the prices, establish strategies. And if prices are low, buy. I'm going to go through that right now with you just to give you kind of my quick little cheat sheet. So right now, what am I looking at? So we got all stocks right here. What am I looking at? Well, I would be looking at, let's see, a firm I don't invest in. I haven't done a deep dive analysis on. Honestly, I'm tempted to do a deep dive on a firm and C3AI. Both of those C3AI kicked freaking butt today. But both of those are highly, highly in the toilet from where they used to stand. Apple is not a bargain right now. Amazon, not a bargain. Google, it's just not a bargain right now. What's the point? It's not a bargain right now. There's no point to doing this. We've got Canoe at $9, $8.92. That's pretty low, but I probably wouldn't add to my position in Canoe. I have a tiny position in Canoe that I bought at like $9.50, so I'm upside down on that one by about 50 cents. But it's a small position, and you know, it's more of a rebound play than a fundamentals play. Okay, great. Now we got the landscapers outside. This is really annoying. All right, so we'll have to do this a little faster here. CCIV, as long as you're not overweight CCIV, like don't let this be more than 4% of your portfolio, I'm okay adding to CCIV at this level. That's good. I'm already there. I'm happy with where I am with my CCIV portfolio. If you want another kind of SPAC, go for Matterport. Matterport, in the long run, to me, that's easily a $30, $40 stock, somewhere in that range, especially once Wall Street starts realizing the benefits of 3D scanning. There's a real opportunity there. EXPI, substantially sold off. There's another one that's low. Enphase, there's another one that's low. Etsy, love it, but it's not as low. It's not as much of a discount as it could be. Again, rather be over here at GHVI. GameStop kicked butt today, up 18%, down 0.5% in the after hours. This one would, I mean, hey, if you want to go long on GameStop, I don't know that I would do it after an 18% run, but hey, maybe if you see another sell-off. Gevo, 734. Personally, I think it's too soon for Gevo. Let's see, Hyliion, Invitae, little red day today. Hey, maybe that's an opportunity for you to get in. Maybe CRISPR is an opportunity for you to get in as well. In fact, if you zoom out on CRISPR, I'm pretty sure we're down on CRISPR for a while here. CRISPR and Invitae, the genomics, here are opportunities to get into some things cheap. Like, sure, the market hasn't been beautiful, but come on, would you rather be part of this hype and euphoria or be buying when people are, pooping their pants right now? I'd rather be buying. That's what I like. So honestly, Invitae, CRISPR, not bad. Not bad. I'm gonna write those names down. So we've got GHVI, I already did some buying of today. CCIV, I'm pretty filled up on. But EXPI, I'm gonna write that one down. So we're gonna write down EXPI. I've got a good position in NEO, EXPI, CRISPR, and Invitae. And then I do also want to do an analysis on a firm and C3 AI. C3 AI, the problem is won't be profitable for quite a few years, so it's a little frustrating. It's much more difficult to do an analysis, obviously, over there. Peloton fell with the wreck today, but it's already up 0.5% in the after hours. Qualcomm, Faraday Solutions. Faraday's pretty cheap, but I haven't done a deep dive on Faraday. Oh, the entire EV sector is just on fire right now, like burning fire. So I even used cars, even Shift, $8, right? Adding when there's pain, and I've done lots of adding, but I've done almost too much adding to where be down. What else do we have here? Oh, look at the after hours on Ubiquity, folks. That's the first, down to 271. That has juicy potential. That's not bad at all, especially as a networking, as a computer play, even honestly some cybersecurity, because they have security gateways as device drama recently, which I will do as well. But yeah, anyway, I mean, these are some things that you can buy tech companies. I mean, Voyager's $22, but you can't buy that one after hours anyway. We'll have to see what they open up for tomorrow. I'm sure they'll be green tomorrow. I mean, I can't guarantee that, but anyway. Upstart is close to that 100 level. Upwork 48, down from like 60, 64. Yeah, okay. All right. So, I mean, these are some names to track. This is when the money is made, folks. People want to make money. People want to buy a stock and then see it go to the moon right away. It's not how you make money. That's how you gamble. You want to make money in the long run. You buy when it's painful. And look, that is, by the way, what I just said is not at all a slam on day trading, swing trading. I'm saying that when there are long investors, people are like, I'm a long investor. And then they buy it and it's like, I hope it goes to the moon in the next 2 hours. It's like, really? Then you didn't fundamentally buy that stock. So anyway, these are my strategies, kind of my game plans. I'm not going to adjust my Coinbase up at this point. I'm going to leave my Coinbase at those levels just in case we fall back to that 310 support. I will be in a position to buy those. But otherwise, I want to take a look at some of these potential cheapies here. Folks, I am more bullish than ever right now on stocks because things are in pain. The last thing I would want to do right now is pay over market value for real estate when I could be getting